On today's Positively Sloped, what we know and don't know through the first 5 weeks of the NFL season. The AI frenzy continues as the deals keep rolling in and the market keeps going higher. What the government shutdown means or doesn't mean for investors, and what investors can look forward to in Q4 before we wrap up with our fades or trades of the week. Okay, let's talk shop. Today is Tuesday, October 7th. Scott, the markets are making all-time highs. A little reversal right about now, but markets making fresh highs, gold making fresh highs, Bitcoin making fresh highs. The Cubs are dead. The Bears are making fresh highs of the last 5 years of sentiment. It's a relatively good time to be around right now.
Well, you said the Cubs are dead. And then you said Bears.
But I said relatively. We've got 4 out of 5 that are really good.
You went from Cubs to Bears, but you didn't mean the Chicago Bears because those guys are dead too. I guess it's a good time to be alive. I'm gonna press that right now. But it is a good time to be alive, I guess. The reason being is we also have interest rates that supposedly are going to be going down thanks to the Federal Reserve and thanks to the administration. So I guess look at it this way. Judging by, as we like to do, Jake, the favorite indicator of say, the media, Green Day versus Red Day, what the media is telling us is going on.
Well, it just became a bad day because we just had a little reversal. At least this morning,
which is why this morning the media would have told you how great things were, how amazing AI was, how many deals are going to be done in the space, and why it's a good time to get in the market. You basically got in all-time highs, and you're finding yourself down at maybe 1% here as the market has pulled back. So there is a lot of great things going on, but one thing that we have to keep in mind is this is still a long-term game. There are still a lot of hiccups and pitfalls to go forward. But as we have said all along since we started this pod, which, by the way, since we started the pod, the market has done some of its most amazing work.
Absolutely.
As we've been going along with it, alongside it. So there's a lot of things that are going to be in the future that I think we have to be excited about, but there are going to be some things short-term that we definitely have to keep an eye on.
You mentioned some pitfalls, some recoveries. Let's start. We haven't talked NFL in a few weeks since we had the last show. Was at our Kingsview Summit.
Which we weren't allowed to. They didn't want us to talk NFL at the Kingsview Summit for some reason. Yeah. I couldn't get that.
Took a couple weeks off due to our travel schedules, and now we're back. So speaking of back, in the last 3 weeks, we've had 2 Bears wins and a bye week. I would say that's as good as you're going to get from the Bears, but are the Bears back?
The Bears are back to some degree in the sense that they're not basically the worst team in the league. I'll give you that. They're not the mockery of the NFL.
Not much room to go down.
There's not. I mean, the expectations though are such to where I worry for Chicago itself, and I worry for fans like you that are very dedicated and very loyal, that all of a sudden maybe they get a couple more wins looking at the schedule here coming up. It doesn't look terrible.
No, it doesn't.
They suddenly start getting back in the mix of the NFC North, and then all of a sudden the usual thing happens at the end of the year where they just basically fall on their face, and it becomes a typical season like it always has been.
This might be different, though, and I'll tell you why. So the Cowboys win in week 3, continues to look better because that is the best offense
Cowboys
in the
not
NFL.
Bad. Yep, sure.
And then the Raiders game, which we'll get to the Raiders, who are an absolute dumpster fire. But the way that game played out, that's a game that the Bears lose every time in the last 5 years. We can't, there's no offense. Ben Johnson is just running clock at the end of the half. It looks like there's no confidence in Caleb. You get to the fourth quarter, we get a touchdown drive. It looks like the Raiders have too much time and are going to march down and hit a field goal. And we blocked the field goal. That is not a Bears win. There's been, 15, 16 blocked field goals already in the NFL.
I can't believe it.
Which is an unbelievable trend. I don't really understand what's going on, but that's not something that the Bears do, right? We're usually like, everybody else can do this. We can't. So ton of optimism. You mentioned the kind of easy schedule. We come out of the bye this week with the Commanders in primetime. A little bit of a revenge spot for the Hail Mary last year, but then it gets softer again. Like there's a path to being 6-2, and I don't think the NFC North is as good as it was 4 weeks ago.
That's what's amazing too. The way the NFL goes, as we all know, is that every week is different. I mean, you can take every week as a slice of a different reality.
Our agenda for last week was a lot different than it is today.
That's right. And so you have to realize that there is a chance that sentiment does get a boost next week. Actually, I think they will get some revenge on the Commanders. The Commanders look a little discombobulated, especially given the fact that the Bears have a reason to come out hard and have the bye week. But then again, you get a win like that. That's a big win, and then they'll get boat raced in the next couple weeks by somebody else that you're like, wait a second, we're supposed to beat so and so. That's why I think the NFL is really exciting right now, but why also the NFC North to that point is a division where now you're kind of looking at it up and down. My Vikings looking basically terrible. I mean, as bad as the colors that people say the Vikings have, because they are similar to the Bears almost, where you go out to these, you look at the game plan, and you don't even know what they're doing half the time when they're running the plays.
Yeah. Bad. And I think this isn't a Bears podcast. It's not an NFC North podcast.
It's not an NFL podcast for
that
matter.
It's not an NFL podcast, but in the NFC North, like you mentioned, it's been most competitive the last couple of years. I think the Lions are just fine. The Lions seem to have shaken off that Packers week 1 loss like it was nothing. They look absolutely as dominant as they did last year, which is a little upsetting for a Ben Johnson stand these days. But that team, it's the players on the field. I think that's what they're showing. They look unbelievable.
It is. It's vote in the confidence of the coach, and I think it's like you said, they've lost 2 coordinators and a couple other guys on defense, and it looked like they were going to be somewhat decimated, somewhat maybe just trying to find reasons to move on here and to go forward. And you're right. I'd almost say the team of the Lions do they look stronger than last year? I mean, that's kind of the interesting thing. It's like we talked about, Jake, how that setup was with the Packers. If you want to talk about the NFL as we do with the sentiment in the NFL and how it kind of just goes along, that was a perfect setup for the Packers to just blow them away, right? On that afternoon, 4 o'clock Eastern game. Packers, coming out party, kind of, I guess, first game of the year in Lambeau. So now the Lions have just come on strong, and I think the Lions will continue to be the Lions. But the thing the Lions have the problem with is we know, and somewhat, I think some of these markets do sometimes too, when it's time to show, when it's time to make it go, they blow it. And that's what we've seen the last couple of years with regards to how they've performed, because they should have been in the Super Bowl, if you ask me, one of the last couple of years.
Sure.
And let's see if they make it all the way now, put up a good record, and then maybe they make it happen this year. 3rd time's the charm.
Yeah. I think the other end of that spectrum is we said in week 1, or maybe it was preseason, who the worst teams in the league might be. I think we said Saints and Dolphins, or maybe that was week 1. I mean, the Saints just got to win. The Dolphins look, I don't know, like they're a bottom 10 team, but maybe not last. Is it the Jets or the Raiders? I mean, the Jets are the only defeated team left, but the Raiders, shy of pushing the Bears and beating the Pats in week 1, who the Pats look legit now, they just got blown out by 35 to the Colts. Like the Raiders, Geno's got 9 picks in 5 weeks. Amazing. That team is awful. I think they're the worst team in the league. I don't actually think it's the Jets.
Geno's finally playing like the quarterback that I thought he was, coming out of West Virginia. I think also that was pre-week 1 when we talked about that. Yeah. We kind of nailed that. I mean, the Saints were the worst team in the league until about a couple weeks ago. Yeah. I can't believe Spencer Rattler's actually still getting the ball snapped to him.
1 in 10.
1 in 10. It's amazing. I think the Jets are probably here to answer that question, Jake. The Jets are the most talented team. That's the baddest team.
Agreed.
Right? Because there's guys on both defense sides. And offense. Yeah. We got Sauce. You got Justin Fields and those guys.
Williams,
Garrett Wilson. Yeah. But my team to submit to this is the Titans. Absolutely an ugly uniform, ugly team, terrible nickname. They moved him out of Houston for the Oilers to put the Texans in there.
They should be allowed to wear their jerseys anymore.
They should be the Tennessee Oilers. I'll tell you, here's a key point about the Titans, when it works. Nobody knows who they're on offense except for Cam Ward, who's got no help. He's got the most sacks against him in the league. Here's a quick thing about Cam Ward. The least of any starting quarterback that started every game, least amount of touchdowns total in the NFL. Do you know how many? 2. Count them, 2 touchdowns by Cam Ward through 5 games. Ridiculous performance for an offense, and the defense isn't that good either.
I'm gonna hurt myself here. It's pretty eerily reminiscent to Caleb and the Bears last year, where we had, I think Caleb threw his first touchdown in late week 2 or week 3. He had the most sacks in the NFL last year, 2nd most in history. He had no help around. Like, it looks very, very similar to what they went through last year. And the Geno Smith comment is funny because in a press conference last week, he said, the guy that I'm supposed to be hasn't showed up yet. And you're saying the guy that he is,
is finally here. And how do you feel if you're Pete Carroll too? You go down to that, you get that job. I think Carroll's the oldest guy the oldest coach in the NFL. And just like me, he's the oldest guy at Kingsview, it feels like some days, and at least the oldest guy in this podcast. And Carroll goes in there and has these supposed solutions, these things for Las Vegas now, which is formerly Oakland Raiders. And they've done nothing. They seem to be completely not bought in. The Gianti or whatever his last name is, the running back, supposed to be this great running back. He's not been anywhere. And I think too, really quick, the lucky thing about the Raiders is Las Vegas doesn't give an F about them.
Yeah,
because
sure not.
They're there as a transition
team. Like
it should be the Las Vegas tourists because they're not there to be actually a native team. So look, they're going to get away with having a bad team because nobody cares.
No doubt. Let's do a couple last quick hits on the NFL real quick. I got a bold prediction.
This is an NFL podcast now.
Yeah,
this is good. Hello,
NFL. I got a bold prediction. I think Harbaugh and the Ravens split ways after this year. I mean, obviously Lamar's injured or whatever that means, but the defense sucks. Derrick Henry he's had
weird usage,
like 90 yards in the last 3 weeks.
Weird usage. Yeah.
I think this could be the end. I mean, they eventually, right? We see this in every single sport. Teams are good, but they can't get over the hump. That's been the Ravens for 5-6 years. It sucks when you've got Patrick Mahomes and the Chiefs in your way, but they're not better than the Bills. They're not better than the Chiefs. They're probably not better than the Bengals when they're healthy. So I think this could be it for Harbaugh.
I agree
He'll
with you.
get swooped up instantly.
Instantly, he will. But good point. It's at some point you got to part ways. Sometimes it's not just working.
Yeah.
Sometimes the cookies just don't
The
taste good
Steelers
enough.
don't do it.
And the Steelers don't. Right. They love Mike Tomlin.
Oh, yeah.
I mean, Mike's going to be great
9
there
wins a year.
forever.
It's
Right.
perfect.
But it's still this situation where I think you're right about the Ravens. And unfortunately, this has been the year for the Ravens where things have really fallen apart just by way of a couple issues. And the AFC, too, looks like there's going to be some changing of the guard. Potentially, I think, which we'll talk about in a second, because I think there's a lot of things in the AFC that are going on that's basically a benefactor of the Ravens falling on their face.
Yeah, I think like the Patriots.
Or the Colts.
Colts?
I mean, the Colts
I don't know that the Colts are legit.
Here's why the Colts look legit to me.
It's a cupcake schedule.
It's cupcake schedule, but they are stomping on people. And if you look at the offensive statistic, the defense looks pretty good. JT, Jonathan Taylor,
is really good.
If he stays healthy, he's still going to be probably the leading rusher in the league again. And your boy Daniel Jones. Danny Dimes, again, on like, what is it, like his fifth team, because he was on the Vikings practice squad last year, and they didn't even bring him out. He's showing up well, and so they're showing up a lot on the receiving squad there, too. I think the Colts are starting to get that confidence built in them to where they're going to do it for Jim Irsay, rest in peace.
We'll see. I've got a gentleman's bet with a friend that they win under 8.5 games, so we'll see.
Man,
they're already 4-1.
Very good, buddy.
The schedule is tough in the back half, but we'll see. I mean, maybe Danny Dimes just needed to get out of New York. You never know, and that's creating
and get a contract,
right? And that's creating an absolute frenzy, and all of a sudden he's performing. Speaking of frenzy, the last few weeks, all we've seen are just mega AI and tech deals coming in. OpenAI being at the forefront of that epicenter. I'll say the epicenter of those deals with Microsoft. With we talked about all these with Google, with Amazon, with Nvidia, with now the big one yesterday, AMD,
Arm Holdings, anybody. I mean, anybody.
Arm, yeah,
it's crazy.
Oracle's deal the other week.
Right.
So I want to ask, we talked a little bit about an AI bubble. We'll get to that. I'm not a believer in this quote unquote bubble. We'll talk about it, but the catalyst does seem to be AI for the market. And I just wonder how much run it still has left. But let's talk about this OpenAI and AMD deal that happened yesterday. Stock AMD was up 35% pre-market, ended up about 23%, which we've seen with all these deals, right? We gap up these ginormous numbers and then we pull back. Like that's 33% of the gain from yesterday. Is AMD the first challenger to NVIDIA? I mean, we saw Broadcom a little bit last year, and that became like the Mag 8, basically. But could AMD actually be the first challenger to NVIDIA with this deal?
Yes, I believe so. And here's the biggest thing for the AMD deal that I believe is that kind of maybe the precursor to how these chip deals and all these things are going to go going forward. I think the biggest concern now in this AI space, Jake, and it's nice to have this buy-in finally from most people. Yeah, yes. And also, too, where are they going to get the power from? I mean, we don't talk about this enough.
The grid?
Right, the grid. I mean,
we can't even move to all electric vehicles.
Right, exactly. We can't do all electric vehicles. The wind power thing is pretty much dead. The solar stuff, the sun is too hot now, I guess, for some solar panels, I've heard, at least overseas. It's like the power's got to come from somewhere. So I think that's the next biggest thing. It's like, where do these deals lend themselves to finding out where these chips and where these processors and things like that process all the AI data and all the AI machinations, where are these things going to actually be more power efficient? I think that's your next thing that's going to happen. Some of the AI stuff that AMD's talked about is going for that. But then again, you look at Sam Altman's comments earlier this week at an OpenAI speech that he gave, and they had nothing to say about the power side of things. And if you want to have a really fun time, go online, and it depends what's legit and what's not. I mean, you're hearing a lot of stuff, whether you go to Twitter, Reddit, or you actually go to Real Data. Depending on who you get it from, it doesn't really matter. You get it from us, obviously, which is the amount of power that it takes to run AI type of data points, whether it's, asking about, what's the fastest way to get down to the Bears game, or what reservations are open if you're in a steakhouse in Chicago. That power that it takes to run that through an AI bot is absolutely insane.
Yeah.
I mean, it takes like as much to run these lights as it does all year round to get that kind of question answer.
Yeah, it's a great point. I think we've seen this. I mean, he was asked about that. Jensen Wong, my buddy, was asked about that also. We're going to see, I think, the next phase of microchip rollouts is going to be servers that don't need to be so hot.
That's right.
And servers that don't need to be so electrically powered, so that we actually can because I agree, sustainability is a huge risk for this industry.
You can't use it otherwise.
And like, how are you going to continue to innovate, continue to get these chips better and faster and bigger, or smaller, probably physically, if we don't have the grid? I think that's a problem. And then the other thing that would lend itself to a bubble, but I'll shut it down in 2 minutes, but is all of the deals that are happening, all of the market returns, all of this like hype around AI is just around deals. We need to see results. There need to be results that these servers are providing unbelievable scalability to these companies. It's providing margin expansion. It's providing shortcuts. You can I hate to say it, lay off people.
I was going to say compromise the hiring, which
that's a better way to
we need
say
to do here. Yeah, I guess so. Right.
So I think we need, that's a risk. What I have to say on the opposite side of that is that's 2, 3, 4 years down the line. So you can't call it a bubble right now because you need to see the results, and you can't ask for results in next quarter or the quarter after that. You need a couple years.
True. And you need people to start using it and understanding it and buying in. And I think here's the next point to yours is that what that next step, Jake, is when they start using it, when everyday people start using it. My mom, you know, an example, like folks that are in like the Gen X and all that folks, and those folks a little bit older, because here's why. Here's where I think that the AI starts to blow up in a good way. Those AI bots or whoever it is, the AI platforms start dialing into new apps. So you get Spotify on board with that.
Yeah,
you get like
sure.
they talked about this on some of the dealing that's going on with Zillow. You get it dialing in with a Google. You know, Google gets their stuff into Google Maps. All these unique things that maybe it's Teams even a communication platform that we use, Waze, whatever it is, SiriusXM. You get these apps that start to dial into this AI bot craze, and all of a sudden you have AI within all these apps, Jake, that you use. Maybe it's our ordering, maybe it's DoorDash. I mean, so now that becomes that AI phase where it's not just these deals. It's actually like, okay, now people can really start using this thing and using it fervently because of the fact it's everywhere now, and you got to buy in, or otherwise, do you really want to punch all that stuff in and deal with it?
Yeah, we had a firm-wide call yesterday about Zonks, which is basically a note taker and an AI assistant. So I think that's going to provide, just to bring this back to our industry and financial advisors, that's going to provide some scalability for advisors. Again, I think it's a risk to administrative assistants and quote unquote, somebody that scribes meeting notes or something.
Basically anyone.
Right. But if you're on a call and you're meeting with a client, instead of having to sit there and write down notes and maybe forget something or not be able to read your own handwriting in your case, because you write like a doctor.
Or even know what I'm saying.
You've got this AI assistant that takes the notes for you.
And I think that's a good point too. And think about an AI assistant that all of a sudden, as I've been running late basically all my life, starts to think, okay, Scott, I realize you're running late. Let me call Michael for you. Let me call Jake for you. Let me text your assistant and tell her to, hey, call so-and-so. Like there's another whole wave of kind of efficiency and kind of this innovativeness that I think this AI bot thing is going to take on, and that's going to help with everybody kind of making their lives a little easier and hopefully a little less stressful, because God knows I could use that.
Yeah, for sure. Let's hone in on OpenAI. So as it stands right now, it's a private company. It's structured as a nonprofit, which Sam Altman intentionally did.
Good old Sam.
When he raised the company up a handful of years ago. There is a for-profit arm under OpenAI that is what's allowed Microsoft to invest in them. Microsoft's been an early adopter. They invested $1 billion in OpenAI in 2019, $10 billion more in 2023. So there's a pathway to going public for OpenAI. I think everybody would want this stock to be traded. Right now, people, analysts have the valuation at $500 billion, which I think would be the biggest, IPO of all time.
For sure.
Is the valuation probably closer to $1 trillion? I mean, to the schedule that we talked about, where these deals are going to take years to, see the fruits of the labor. OpenAI is going to take a year, maybe 2 years, maybe 3 years to IPO. So by then, we probably see some results from these deals that they have with all these massive companies. I think the company might IPO closer to $1 trillion than $500 billion.
I think that's too low. And I think maybe
it's our first $5 trillion company.
I think that's an IPO that I'm going to run to get involved in right now. In fact, I'm going to find a venture fund that's going to be in the OpenAI AI space at $500 billion, because that seems like a deal. I don't even think it takes 3 years. I think these deals that we're starting to see, look at the acceleration, Jake, and all the announcement in the news just in this last, quarter. This should be the next level of what I think brings up all this AI stuff and brings it maybe even more to market. Because you mentioned at the beginning, it's hitting a lot of companies. You pick your favorite company, whether it's Micron. It's getting everywhere. AMD, you mentioned. There's all kinds of space out there that's going on where there's a lot of spread now to where there's going to be, I think, a rush now to get these IPOs out there. And so I would guess that this is a 1 or 2 year deal. And I would say that if you can manage to get a valuation locked in on OpenAI at $500 billion, my goodness, I'd be in, because we just talked about how big that IPO would be just in historical standpoints. But think about the money that's going to flood into that thing the day it starts trading.
Oh yeah, retail, from institutional investors.
Of course, people that can't get exposure to it but start to use those bots that start to use the platforms are going to be just dying to do that kind of thing. So good for them. And then look at all the internet providers. Look at some of the people that build out some of those some of the structures that actually house the data centers. Those things are all next too, as far as energy efficiency. So then you bring on all that energy efficiency behind the AI stuff itself. It's a huge industry industry. Let me tell you one quick thing. The thing that's been said is, oh my God, this is what I love. We talk about this again, back to our favorite people in the media. Oh my God, this is 1999 again. Oh my God, this is 2007. Oh my God, it's 1987, whatever. No, it's actually like 1991 or 2 or 3. Like this feels like the beginning of the 90s when the internet was starting to get talked about, starting to get maybe utilized at some of the higher up places around the globe, or at least in the United States. So I particularly think that the interesting part is more people say it's 1999, the more that I'm excited that this thing's still got a ways to run, just because of the fact that if people are already blowing this thing away and saying we've gone too far, that to me tells me you've got a lot further to go.
Yeah, I mean, I've done some research on it, considering I was 2 during the 99-2000 bubble.
Were you?
You
Jeez,
lived it.
That old?
So I heard last week that bubbles are made out of debt. And you know, in 99 and 2000, you had all these companies, all these internet companies that we didn't know what the internet was yet. There was, which is, you know, you could say is similar to AI, but a ton of debt. These companies were hyper levered. There wasn't really the products there. There wasn't really the margins. There weren't the earnings. You know, you kind of had like this pay to play, and there were clicks on websites, and we thought that was great. And these companies, though, now the margin expansion is there. The earnings, we've seen double-digit earnings on these companies for 4, 5, 6 years, right? You don't see like these massive PE explosions though, where we're trading 200, 300 times earnings like you did in 2000. So a bubble's made out of debt. These companies aren't like extremely hyper levered like they were 25 years ago. That's why I don't think it's a debt yet. That's why, or a bubble yet. That's why I agree with you that it's not here. It might be 2, 3, 4 years from now, but we're still not there yet. We're still in a very fundamentally sound place for these Mag 7, these Mag 10, whatever moniker you want to use now. We're still in a really, really strong fundamental place with these companies.
Yes, and I think too, that leverage point is a good one, because this is a way different kind of leverage. This is a way different kind of, let's say, cash capital raises that these folks are doing now versus, like you said, in the 90s, where this is just throwing money at things and hoping it would go. These companies have a product. There's a user case, and so you have a reason to actually give these companies money because they have a path cut out for them. And so that's also why, as an investor, I think when you look at the AI space going forward, the key is going to be, and this is what, again, back to our friends at the media say, well, there's only going to be a few winners. There's only going to be, 1 or 2, so don't get in everything because there's not going to be enough space. I disagree with that. I think a lot of these companies are going to do things maybe just slightly different from each different one. So therefore, you're going to have a lot of ways to get exposure to AI, depending on the exposure you want, certainly, to where you're going to have a value in your portfolio to having that chance to get into AI. And I don't think you have to be as worrisome, especially right now, given that the swell and the wave is really starting to take shape here, that you're going to pick one versus the other. Because as we talked about earlier with just some of the names that we've already gone over, it's like there's been an amazing blow up across the whole board just because on NVIDIA news from like just months ago. And then AMD news, it kind of lifts the whole boat. So I think that's something too. But going forward, you're going to have a lot of chances here to get into AI, just provided you take action sooner than later.
For sure. Can I tell you a company that should never be invested in?
No.
The government.
Well, are they a company? I mean, they'll tell you they're a company,
right?
And that's the
it's
funny
being
thing.
Run like one.
But here's the funny thing: you look at a Palantir, for example, which is again kind of the AI thing too, which one we haven't mentioned yet.
Defense
Guess
contracting.
what? Exactly. Guess what got them going? The government contracts that came
Lockheed,
in and said,
Raytheon,
that's right,
sure.
yes. And it got in this whole kind of government contracting thing, and that whole space kind of started to go and started to think, like, wow, there's really money there. So the government, while they are in the way, while they are not exactly in, I say, our best interest, they sometimes come in handy when things are kind of slow and things aren't going well, and they kind of give that first push that maybe some of these companies originally needed.
Yeah. So when this pod will be released Wednesday morning, will be a week into government shutdown. The second government shutdown in a Trump presidency. The first one at the end of 2018 was the longest shutdown in government history basically.
Yes.
34 days long. So we'll see how long this one proceeds. Is this related to the one big beautiful bill? I mean, what are they arguing about right now? What can't they come together on? Besides the fact that it's split government both ways and they're never going to agree on anything in today's political climate.
It's the Hatfields and the Montagues, as far as Democrats and Republicans, cats and dogs living together, as we talked about, total chaos, mass hysteria. But it's a basic argumentative thing. And it's Schumer and some of his cronies fighting against, funding for the government because they've made so many cuts, but then they need more money through Doge and whatnot, Jake. It's typical politics, as you noted, politics in Washington. What it does tell you, though, is how much government do we really need? Because the markets have been doing just fine. The sun has been coming up. Traffic lights have been working. We do have some furloughs and some things going on that will probably be recompensated or recompensed when we get back to work here. Whenever they do that, I think this could be, given how there's not been this whole fervor of, oh my God, we've got to get back together. We've got to get this going again when we're in the middle of October almost. And so we've got some time to kind of blow it in as far as it could be blown into the future here. Nobody's going to really care. So I think this actually could be the longest shutdown we ever have, potentially, based on how everybody's kind of reacting so far, because nothing yet has really broken down. And just think about this too. All this has done is kind of kept all some of our negotiations and things like that on the sideline when it comes to like some of the tariffs and other things that we've been talking about with some of our treaties. It's like, does it really affect that much? And if it did, we haven't heard anything and seen anything. And so far, everything looks to be kind of A-okay. And I forgot that even government is even shut down. What's that?
I was going to say, and let's talk about how that affects the investor. So the government shutdown of Trump's first tenure was 34 days, the end of 2018, early 2019. And that was obviously end of 2018 was a bad time for the market. Yep. But in that time period, the market bounced 11%. And so, typically we see when the government shuts down, whether it be a week, 2 weeks, a month, it doesn't have a huge impact on the markets. I mean, I don't think that investors are really, paying much attention to whether the government's in session or not. Again, something that we've covered a little bit of a theme is that the government seems to be pretty ineffective anyways. So whether they're working, not working, you still have essential workers that are working. So airports are still operating.
Traffic lights are working. Car sales. Yes.
For someone's, for your money, for your retirement account, for your brokerage account, I wouldn't be taking the government shutdown and saying, well, we got to get to cash or anything.
That's
like
right.
that.
And I tell you too, as a guy that loves economic data, that relies on stuff from the Bureau of Labor Statistics, the NBER, the National Bureau of Economic Research, like that's data, Jake, that I like to use to manage portfolios.
Near and dear to our heart.
Very, very dear. Those 7 letters. It's like, you know what? Not having some of that data for a month or two, or having it as we've had it kind of very sparsely and kind of calculating our own as we kind of do anyway, has been actually kind of nice. It's actually been kind of a relief to not have to come out and listen to Schumer and Pelosi and all these guys bicker at each other nonstop, and then have this data points be poo-pooed anyway. It's been a nice breather, man. It's been a nice little vacation from the usual.
So you want a vacation, because what I kind of hear you saying is that you would be on board with going to quarterly economic data.
I would go quarterly on some things. I would go quarterly on more of a CPI type thing. I think the jobs reports are goofy anyway. We've talked about what's come out of the BLS being that there's that extra L in the middle. But some of the other stuff, GDP is already quarterly, even though we do have monthly revisions. The GDP is quarterly, and if you look at that, there's monthly revisions that come out now. They're not even important. The first read is usually the one that we want, or the final. So yeah, you could end up improving some of the output of some of those data points, because if you look at the analysis that we do, Jake, on a lot of the stuff, whether it's employment, even CPI, whether it's certainly economic output, this stuff doesn't change that much month to month. It actually changes a lot more quarter to quarter. So that's something to think about going forward when you're looking at economic data and seeing what they do going forward, and how people are going to freak out about how they're taking away some of this and some of that, when in reality, it's kind of already been taken away. We've already adjusted to that. So I think that's a good reason that the government itself probably realizes, oh my gosh, we don't really have a beat on that anyway, so let's just move on.
So I wonder if there's reason to freak out about quarterly, right? Where we just entered into Q4. We've had 3 great quarters for the market. We had a brief dip, as we know, back February to April, leading up to the end of the 90-day pause and Liberation Day. Markets, again, as we said at the top here, making fresh highs, all 3 indices, maybe a little pullback today, but still pushing higher. Gold is approaching 3,400, which would be an all-time high. Bitcoin is at 125,000, which is an all-time high. What do investors need to look at for the last quarter of the year here? I mean, are we, again, back to the question, are we overextended? I mean, we're looking at a record 3-year period here. We had back-to-back 20+% years in 23 and 24, which was already not historic, but it was
tough years too.
Pretty
coming
good
out of COVID, you know what I mean? I mean, who would have thought coming out of COVID we'd bang out 20% years? You wouldn't, especially after 22. Here's the one thing though that you said that I would tell you I love, and I'd tell you this right now. I would love it if gold was coming up on 3,400. So you sell me your gold at 3,400, I will take it, because here's the deal: 4,000 on gold is absolute insanity. Because I mean, you've got gold that was sitting at 2,000 an ounce for like, I don't know, a decade or two, and now like all of a sudden gold is like basically doubled itself in the last like 3.5 years. I think that's something to take a look at when you look at gold and these metals and some of these alternatives. You talked about Bitcoin earlier. Those are numbers that are crazy. And oh, by the way, the NASDAQ, as we talked about on the pod previously, above 25,000, as we talked about too. So you've got all these crazy numbers and these crazy milestones, so crazy that Jake wants to sell me his gold at 3,400, which I'm going to take all of it right now, because I think gold's going to probably 5,000 if this stuff keeps going with regards to how we keep funneling money into this economy, funneling money into the just overall coffers of the banks and such, because now we've got the administration and banks around the world, central banks around the world, and legislation and leadership around the world telling us we've got to just blow up the economies by pushing money everywhere and lowering interest rates and spending more fiscally. It's crazy.
Yeah, I mean, how can you lose? How can you lose in this market right now? I mean, I say that facetiously. But
I get worried when people say things like that.
So facetious. Everything's at all-time highs. You could have been in Bitcoin at the start of the year at 99,000. You're up 25%. You could have been in gold below 4,000. My mistake. Now you're up to 3,850. I think is the actual number. So I mean, how do you lose? I mean, I feel bad for the Bears. I feel bad for some of the tactical managers that are in cash, but that's kind of the way of that sort of investing is you're going to be in cash. I remember when I was at an industry conference in Miami a few years ago, guy picked up our Blue Chips Elite fact card, asked me how much cash we had. I said, we're always invested. He slammed it down on the table. This was in 2023 and said, I'm in 50% cash right now.
Oof.
I never have less than 20%. How do you think that guy feels over the last 3 years?
Well, hopefully you got in and hopefully you didn't get in at the wrong time.
He was really pronounced on this comment.
That sounds like a guy, and we have some of these investors too, and we've had some of these advisors, and that's why advisors, I think, really appreciate us, that sound like they do get back in, and then they get out again, and then they got to get back in again. And so that's why kind of tactically, and I think more strategically, we approach things. And gold did cross 4,000 this morning, but there's also the thing too about why I think there's also a point to, this is why that folks need to come to the grips with like where this market and economy is, because if you don't like stocks, I do believe you're right. I think you can find alternatives out there that are really good, but just know that unlike stocks, which are, wait a second, what's that word I use? Oh, positively sloped. These metals, Bitcoins, and things like that aren't always positively sloped. They don't have a positive slope to them over the course of as much data analysis or data range as, say, stocks do. So that's another thing to keep in mind when if you're looking at these things as an alternative, they exactly still are an alternative, because to me, the best game in the world and best game in my life is stocks. And that's where we're going to be because of the slope of it, but also just looking at other things to maybe augment what you're doing is a good thing, but just know that maybe that is the stuff you should be a little bit more tactical with, just much like that guy was in Miami that hopefully is not, sir, in cash still. Yeah.
So Q4 is historically the best quarter of the year for the markets. The S&P 500 specifically does 4.1% since 1950. So you're looking at 74 years of data. You think that trend continues? I mean, when you look at an average, it means it could be all over the place. But I question whether or not we could do 4.1% basically geometrically every quarter this year, coming off of 70% total return over the last, 11 quarters?
Yeah, sure.
So I'm interested. I mean, typically Q4 is really good. And that's because what? We have great feelings around the holidays. Thanksgiving's amazing. Christmas and
Hanukkah's
the winter
amazing.
holidays are great.
Everybody's excited.
You stay inside. It's warm. You get the Santa Claus rally. You feel good. What should investors?
I love hot chocolate. That's good.
What should investors be looking for in Q4? And is there any place to even tax loss harvest? I mean, you're secularly up again this year.
You are. So good point about that. There's not going to be a lot of selling. So as we know with the markets, I mean, it's one thing to have some negative sentiment, things like that, but you have to have sellers. You have to have sellers knocking out those buyers and those bid orders, which actually the sellers might be thinking of you doing your Christmas Carol CD again, which I would actually love. We actually may want to sell that this year, actually, on the pod, is Chestnuts Roasting on Open Fire.
I actually have a pretty solid voice.
You actually do, and I think we might want to do one of those for the pod, actually. We may give out 2 for 1 on that just to try to get them out there. But there's, you remind me of just Bing Crosby doing that, because there's reasons that now, this year especially, I think there's going to be a lot more sentiment on the back end than there has been in the last couple of years. COVID's dead, speaking of that. There's been a lot more economic, I think, sustainability now that folks are realizing. There's probably going to be some more positive news out of the tariffs segment, maybe if we get back to work here in the government. If we don't, even better. And also the fact, too, that there's a lot of things looking into next year as the big, beautiful bill takes shape even further that should benefit these corporations. In my mind, that's what kind of sets up that next push to 2025, 26 rather, from 25. And you talked about the numbers. I mean, 70% here, 80% there. We talk about compounding a lot too at the office. We talk about that a lot with our advisors. The best way that I describe compounding is money makes money, and then money makes money, which is something that comes out of a Dr. Dre CD. But that's so important, Jake, when you think about the adding of, you had to think about that one. You had to think about the adding of that money on top of the money that's already made the money. It's wild to think about how rich people feel and why that kind of wealth effect goes into the play of what those stocks actually are, which further brings them up and further kind of manifests that next higher level.
Yeah, for sure. So let's get to our fades or trades today. I see that my notes are accidentally on your screen, so you better not steal anything I have to say.
Yeah, I got them now.
Go
sure.
solo on this.
Huh?
So on the topic of Q4 and doing 4.1% average, are you fading or trading that the S&P is going to post a third consecutive year of 20%? Basically, as of action today, we would need to do 4.7% for the rest of the year to get there. Are you fading or trading?
I think it's going to make the 20% again. So I'm going to say I'm going to trade that and say that, yes, it's going to make the 20% just because the fact there's not really that catalyst out there to sell yet unless there's some sort of exogenous circumstance. So that's a trade for me that's going another 20% up.
Yeah, I'm going to fade that.
What?
I don't see reason for the market to go lower. We've covered the catalyst. We've covered AI. But I just think there's got to be a little bit of exhaustion at some point. Maybe I'm wrong and it's the start of January because, like we said, there's not a lot of selling to do at the end of this year. So people will lock in some gains at the start of next year, wait for some losses. So maybe it's on the turn of the calendar. But I'm going to say we're going to mosey upwards at the end of the quarter here, but I don't think we're going to get 4.7. I think we'll be just under 20%.
I love that. And I think that's actually just under 20, 19.99.
Yeah, right, 19. That's fine. And then I'll tell you I was basically
born.
right.
Yeah, but it's basically like that's a chance too to kind of have that kind of juxtaposition of ebb and flow of sellers and buyers towards the end of the year, which probably pushes it higher. Well, I got one for you. How about fade or trade this? We're talking about OpenAI. We talked about the AI stuff earlier. What do you think about the OpenAI? We kind of already went over this, but my thought. How could OpenAI, when they do their IPO, let's say it's the next 3 to 5 years, as you mentioned, 1 to 2 for me, how could their IPO end up as far as the size? Do you think it's going to be over or under $1 trillion in market cap on the IPO?
Yeah, I'll trade that the IPO will be above $1 trillion. Again, like you said, we kind of already covered this, but I think by the time that you get this reorganization done, we'll see some results from these deals with these massive Mag 7 companies. I think that AI is real. That's back to the bubble point. I don't think that this is all just hype and craze and we're throwing money at the wall for nothing. So I'm going to say that by the time OpenAI is ready to IPO and gets their for-profit arm rolled out from under the nonprofit, we're IPOing above $1 trillion.
I agree. And I got another thing for you now. I bet you they don't IPO it without $1 trillion valuation. I think it's going to be one of those things that's going to be like that sticker on it. First $1 trillion IPO. Yes, please. We'll take it.
Let me add in the third one here, as we talked about earlier. But MLB playoffs, we're in the divisional series right now. We've got 4 series going around. My Cubs that are dead. 3 of the series are 2-0 right now. So would you fade or trade? I'm going to choose one. Would you fade or trade that the Phillies have the best chance of coming back against the Dodgers?
I agree with that. I think the Phillies, they win. Obviously, got to win 2 in LA and then come back to Philly. But I think you look at them versus the Cubs, which is, the Brewers have had their number all year, especially lately. And then the Yankees just look messed up. The Blue Jays look on fire. I'll give you. So I'm gonna trade that it is the Phillies. What's yours? You said Phillies too?
No, I'm gonna say it's the Cubs.
Oh my God, you are such a homer. Here's my quick one though. Here's fade or trade this. Do you think the matchup is going to be those 2 big market teams? Then it's going to be a Yankees, Dodgers. There's no real big market team left. Tigers. It's Dodgers and who do you think in the NL? Do you think it's Brewers and somebody?
I think it's Dodgers, Blue Jays.
Wow. I think it's Brewers, Mariners. Okay. I'm telling you that because I think it's a weird situation where now you have a lot of these big.
You're going hitting, I'm going pitching.
That's right, and I think that's what's going to be interesting is you're going to have a pitching or hitting or maybe a mix of both. Maybe it's Brewers.
Sorry, you're going pitching.
Yeah,
I'm
pitching
going
right, and maybe it's Brewers, Blue Jays. The problem I think for the NFL though, and the NBA, the MLB, Major League Baseball, is that if you get a couple of those matchups, you want to talk about a bad series to watch, much like the Oklahoma City Thunder and the Indiana Pacers. Yeah. There you go.
Mariners, Brewers, I think, or probably Tigers, Brewers is a nightmare for the MLB.
That's
but
bad.
I'm fading the Phillies. The saying goes, the series doesn't start until the away team wins. The Phillies just lost 2 at home to the Dodgers.
Bad
the
losses
Dodgers will
too.
sweep.
Yep.
I think the Yankees, the Blue Jays have been the hottest team in baseball at the end of the season. I think the Blue Jays are actually pretty legit. The offense looks great.
Amazing.
They've got 3-4 starters at the top of the line to do it. I'm taking the Cubs. I know I just said they're dead, but I am a homer and my mood changes every minute. Going to the game tomorrow night in Wrigley.
You better go. Yep.
I think the rotation is in a really, really bad spot, but the offense has got to wake up at some point. It sucked to hit a 3-run homer to start the game yesterday and have the Brewers answer immediately, but you're actually wrong about the Brewers-Cubs. The Cubs won the season series.
But lately, though, the Brewers beat them pretty good, I think, later in the series, didn't they?
No,
the season.
The Cubs.
Yeah.
The Cubs,
the total series.
There was a 5-game set at the end of the season. We won 3 out of 5.
Well, okay, you count 3 out of 5 as a win, but that's
3 out of 5 is how you win a series in the playoffs. So I'm taking the Cubs to come back from 0-2.
Okay, how about this? Let's go to a different sport. Let's look at golf. I think something that has been interesting going on with the golf It's basically the sport of golf lately, especially given the Ryder Cup and some of the things that happen at some of the tournaments. Let's talk about European golf being firmly ahead now of the U.S. given the Ryder Cup and how terrible, just not even the display of the fans, who cares about that, how terrible the U.S. played for the first 3 days of that tournament and then had to basically make a monumental comeback to even get close to them on the leaderboard when it came to taking that cup home.
It was really bad. The question is, European golf's firmly ahead of the U.S. I'm going to fade that. Something on the fans real quick. European fans were horrible in Rome.
Absolutely right.
They just speak a different language, I think. So not everybody knows that
they couldn't
all
understand
the bad
because
things
they were so drunk.
saying. So yeah, I thought the fans, there were definitely some bad stuff. They threw something at Rory's wife. That's pretty messed up. I think calling Shane Lowry fat over and over and over again is pretty messed up.
Which is terrible because he's obese. I mean, call it the right thing. And Rory's wife also it looked like she had been hit in the face with a bottle. Oh, so like, why do that again? Nice. And also there's a lot of bad feelings around the Ryder Cup right now too, where maybe I'll tell you, it happens again. I'm not sure where it is next year. I think it's back
in Ireland.
Oh, it's Ireland. Okay. So it's back in Ireland. So it's like in 2 years, it's back in Pinehurst. Like if we have a couple more bad sentiments, I'll tell you, the Ryder Cup might be
no way.
I mean, I'm telling you, because they're going to look at something different. Because I don't know if the viewership was that good for what they wanted this year anyway. And unless they get like some wrestling or something going on with that, I don't think we're going to be as popular for that Ryder Cup thing going forward.
Yeah, I think the U.S. is fine. I mean, Scotty is world number one. He won 1 point. That's pretty unacceptable. You typically see that. Tiger was very similar, where like these guys win 4-day tournaments because they don't compound mistakes. And they go under par every day for 4 days. It's tough to beat somebody in 18 holes. It's a different sport, but I think the European team as a whole was more well-rounded. They've got better. They had a better 12 guys, but
team, yeah,
I'm not that worried about it. I think we'll bounce back. There's something to say, and I'm so confused about it, but like the camaraderie of European teams compared to the U.S. Like we see it with the Olympics, also with the NBA or with basketball. Where like somehow the talent level in France is rising and Spain is rising, but it's not anywhere near the U.S. And somehow they compete, and somehow France almost, it took Steph Curry hitting 3 fadeaway contested threes for the U.S. to win gold. There's something about the Europeans and their camaraderie that is different than the U.S., but I think the U.S. is going to have bad taste in their mouth. They'll bounce back in Ireland on a links course, which is going to be very tough for us, but I think we'll see an upset in Ireland.
Wow, okay, let's see it. Well, maybe you and I go over there and we'll do a pod from there.
That'd be cool. Last fader trade to cover on the topic of sports and on the topic of New York, actually. The saying goes, if you can't make it here, you can't make it anywhere in New York City.
New York.
I don't even know that this is a fader trade. New York sports are just an absolute disarray. Like it's horrible. Like the Mets had the second highest cap in the MLB. They melted down in epic fashion and missed the playoffs. The Jets, we've covered, are 0-5.
Giants terrible
too, for
that matter.
Terrible.
Ugly
the Yankees
franchise.
are about to get bounced. The Rangers are always good but never make it.
New York Liberty has fallen off the
Liberty
pot a little bit.
Won last year and they're gone.
Yeah.
The Knicks are probably the only hope. But are you fading or trading that New York sports is in limbo for the next 5 years?
I'm going to give you the following. I'm not going to think it's just New York. I mean, look at the top 3 cities in the United States. I mean, you got LA, which is LA's
fine.
LA's fine, but LA's got LA Angels, which aren't that good. I mean, the Dodgers,
Rams,
the Rams, but then the Lakers. I mean, Lakers kind of meh. Yep. The Clippers not that great. I think you've got. I mean, the LA Sparks stink. Chicago, dude, third biggest city in the country. Absolutely awful. One of the worst big cities when it comes to sports. Miami sucks. And guess what? Philadelphia has been pretty good on the city. The Phillies
sucks.
Yeah, but Philly has not been good. I mean, the Flyers have sucked. The Sixers have sucked. So you look at some of these big teams. Detroit has come back a little bit. A lot of these big market teams, Dallas, have not really kind of showed up the way they need to.
Point.
And it's kind of a weird thing how, New York definitely leading the charge on that, but not far behind are some of the other cities we mentioned.
Agreed with that.
So trade that.
Let's wrap up with a random ticker roll, Scott. Let's pull a ticker off the back.
Yeah. So what do? I put my finger up. Is that right? Or which finger?
Turn around and grab a ticker from what's behind us.
Okay, here it is. Intel. Wow. Good Lord. Okay, Intel. Intel is probably a trade here, but it's not as big of a trade as it was, say, 3 weeks ago when we got dealings going on with Intel, say the government, and then having big deals announced for them outside of that. Here's the thing about Intel and some of the other, let's call it blue chip, old market tech. Intel, the IBMs of the world, some of the stocks that we own in some of our portfolios, Jake, which have been great ownership positions because everybody threw these guys out with the bathwater. Dell as well. If you look at these old school companies that have been just completely forgotten vis-a-vis the Amazons, the Microsofts, the Googles, and so forth. Watch out for these old school blue chip dinosaurs to come out and really chop up some of these big market guys because of the fact that they have been left for dead. So when you look at the Intels of the world, as we just pointed out on the ticker, you're trading those, or I am, because of the fact that I still think valuations on some of these companies, some of the metrics and fundamentals on things like IBM, which we own, are great areas to have in your portfolio to augment and kind of develop at least some of that back end supply when it comes to the tech and the ownership that you want to have when it comes to these processors and these servers and some of these networking companies.
Yeah, I'll trade INTC Intel as well. Obviously, the news a couple weeks ago or a month ago at this point now that the government was taking a 10% stake
and other
in
companies
Intel.
too. Yes,
Intel's up 50% or so since that news. So
be careful chasing that, but it goes to show you the interest.
But what I'll tell you is still down 50% since the 2021 all-time highs. So there's a lot of room back up to the top. If you're a technical guy, you're at Fibonacci's law right there. I mean, there's room to go back up and not be at unprecedented numbers for Intel. So I'm going to trade Intel in the long term.
Yeah, there's a good fib retracement there level, and you saw the same thing with IBM. You're seeing the same thing with Dell and some of these older companies that
they're going to reinvent.
That's right. They're reinventing, and they're still alive. That's the other thing. It's kind of like they're still alive in the game, and there's still folks in those companies. There's still leadership in those companies. There's still patents and things like that they can use to help kind of jump on this AI train. So I like this old school blue chip tech. I like it. That's the show for today. We'll be back with you in a couple weeks. See ya.